currency strategy and market research at FXTM. He joins us from Cyprus. Thanks very much for being with us on the programme. The main news in the business, as far as we're concerned, really, is that decision by Donald Trump to put off any steel tariff changes, likely to relieve markets for now, but it's kind of pushing the decision down the line, rather, isn't it?
Good morning, and thank you for having me. It does appear that way, that this seems to be an extension to the negotiations, and that perhaps in another 30 days or so we will see more news when it comes to the Trump tariffs. However, it is going to be seen as relief for the markets and a positive for the markets, because these Trump trade tariffs and the whole trade war headline is certainly not good news for the global economy, and it would not be good news for economic sentiment when it comes to investors. So what we believe is happening here is that although the nature and the policies that are being brought in from the United States in the headlines appear to be quite aggressive as it is on the headline, behind the scenes and as negotiations are going through, they appear to be quite watered down in reality. And this is why the markets are behaving quite calm in comparison to a couple of weeks ago, where they were very sensitive to any trade war headlines or any of this political risk elements.
Now, I know you've also been following very closely, haven't you, of course, those talks at the end of last week at North Korea between the two sides kind of coming together. It's not affected the markets quite as much as we might have thought.
That's correct. Although it's obviously seen as a positive move for the markets, and it is obviously much less geopolitical risk premium that investors are pricing in, it does appear that investors are in a little bit of a wait-and-see mood to see what happens when Donald Trump eventually does meet the leader of North Korea. And there's other geopolitical tensions that the markets are still monitoring, such as tensions between the US and Russia. You have this trade rhetoric that, although might have been put in the back burner a little bit longer, and you have the ongoing situation between the US and China over trade. And over the next couple of weeks, you have the US and Iran and the Iranian nuclear deal, which will be looked at by investors as a heavy risk.
Dollar's still riding high. Lots of factors still encouraging the stronger dollar at the moment.
This dollar turnaround that we've seen over the past couple of days of April has certainly caught investors by surprise. The dollar's now reaching its highest level since early 2018. And if investors would have said that a couple of weeks ago, many would have been surprised. What appears to be driving the dollar higher is a little bit less of this geopolitical risk premium, and also consistency when it comes to the tone of the Federal Reserve, because the US Central Bank and the US economy particularly is performing very well. The US Central Bank still appears to be very upbeat when it comes to monetary policy and wanting to raise US interest rates. And you don't see this consistency in tone with other developed central banks, such as the European Central Bank and specifically the Bank of England, who are constantly going backwards and forwards over whether they are preparing the markets for a possible UK interest rate rise. And what this is doing is pulling investors a little bit more closer towards the US dollar.
Jameel, good to have you with us on the programme today. That's Jameel Ahmad, Head of Currency Strategy and Market Research at FXTM, joining us there from Cyprus. Thanks very much for being with us on the programme today. Now let's move on with some other business.